Have you ever opened your paycheck and wondered, where did all my hard-earned money go? Now imagine moving to a different country. Would you keep more of your cash or would it vanish even faster? In today's video, we're breaking down income taxes around the world, from the places where you keep it all to the ones that take more than half. Let's get started. Section 1. Introduction to Income Taxes. Taxes. A word that makes everyone groan, but they're the price we pay to live in a functioning society. Different countries have wildly different systems though. Some are tax havens with low or no income tax, while others have high rates but offer amazing public benefits. So, where does your country stand, and what would happen if you moved? Section 2. Low tax countries. Let's start with the dream destinations for the tax-averse, low-tax countries. In places like the United Arab Emirates, Monaco, and even the Bahamas, income tax is non-existent. Yes, you heard that right, zero income tax. Imagine getting your entire paycheck untouched. Sounds like paradise, right? But there's a catch. While you might keep all your money, you'll also pay a hefty premium for the lifestyle. Housing, food, and even schooling can cost a fortune. Plus, in some cases, public services like free healthcare or education are practically non-existent. It's all out of pocket. So the question is, are you saving money or just spending it differently? Section 3. Moderate tax countries. Next, we have countries with moderate taxes like the United States and Singapore. Here, taxes are more balanced, giving you enough deductions and exemptions to ease the burden. Let's take the US as an example. The federal tax rate ranges from 10% to 37%, and you can lower it with deductions like mortgage interest, healthcare expenses, or even donating to charity. But there's a twist. Many US states have their own income taxes, ranging from nothing in Texas and Florida to over 13% in California. It's like a game of tax roulette. Spin the wheel and hope for a lower rate. In Singapore, taxes are straightforward and top out at 22%. Plus, there's no tax on capital gains or foreign income, making it a hotspot for entrepreneurs and investors. Section 4. High tax countries. Now let's talk about the heavy hitters, high tax countries. Think Sweden, Denmark, and Norway. Here taxes can exceed 50% of your income. Yes, half of your earnings will go to the government, but what do you get in return? A lot of free healthcare, checked on free college education, double check, generous parental leave, unemployment benefits, and world-class public infrastructure. Triple check, it's a trade-off. You're paying for a society where safety nets are strong and opportunities are accessible to everyone. The question is, would you give up half your income for this level of security? Section 5. Comparing a $100,000 salary across countries. Now let's make this personal. Imagine you earn $100,000 a year. Here's what your take-home pay might look like. In the UAE, you'd keep the full $100,000. In the US, after federal and state taxes, you'd keep about $70,000 to $80,000, depending on where you live. In Sweden, you'd take home about $50,000 to $55,000, but you'd enjoy world-class benefits in return. It's eye-opening, isn't it? Where you live can drastically affect how much money you actually get to keep. Section 6. Why it matters. At the end of the day, income taxes aren't just about numbers. They reflect a country's priorities. Low taxes might mean fewer public services, while higher taxes often support a robust welfare system. There's no one-size-fits-all solution. It's all about what matters most to you. So what would you choose? A tax haven with no safety nets or a high-tax country with extensive benefits? Let me know in the comments below. Conclusion and call to action. Thanks for joining me on this journey around the world of taxes. If you found this video eye-opening, don't forget to like, share, and subscribe. Let's keep exploring fascinating topics like this together. Until next time, stay curious and keep learning.